Hello, should I trade stocks under $5? Well, if you find good stocks that sells for $5 or less, sign me up. Will you please let me know? I have now purchased stocks $5 or less in years. Since I started swing trading in end of 2023, beginning of 2024 until now, I focus on large cap stocks. And just because I figure they are stable enough to be trustworthy that they will be around, because I have experience with stocks bankrupt thing on me, and I still have some stocks in the large cap that went through some changes that sold their stocks on our behalf last year. So at least they didn't bankrupt. They didn't went bankrupt, but they went through a type of merger and they sold the stock at a loss at the price it was selling back then. So those things can happen. So I just focus on large cap stocks to minimize those things that I don't have control over, since I'm putting my money in somebody's business. And I'm only focusing on the chart to analyze them. I'm not paying attention to the financial, since I'm not going to hold on to the stocks forever. I don't know if that'll change anything, but either way, I'm investing in those stocks by buying and selling the same stocks. So I focus on large cap stocks, and those large cap stocks, they are not cheap. So, but they are affordable. So therefore, it's not so much about the price, it's more so about a certain market capitalization type of stocks. If you end up finding stocks less than $5 in the market capitalization that you selected to create your watch list of stocks, and those stocks, their chart, you think they are comparable with the strategy you are using to swing trade them, or you plan to use to swing trade them, it's worth giving them a try. As a swing trader, a beginner swing trader, what I like to recommend is to buy one share of a particular stocks per trade when you have not purchased that stocks before. And when you sell it at a profit, you can just target $1 profit. Does not mean you sell it when you have $1 profit in it. Your expectation is to be able to make $1 profit after you pay your brokerage fee, or to make a profit in it after you pay your brokerage fee. Once you have that confirmation that you can make profit swing trading that stocks, and that stocks can be traded with the strategy you are using, it is a check. Is a stocks you can keep in your watch list to swing trade with that strategy you are using. So buying one stocks allows you to stretch your money that you are saving to put in the account to swing trade, will allow you to stretch that money to be able to buy different stocks from your watch list. Each time they are set where you want to buy, if you have money to buy them, you'll be able to have money to buy one share of that stocks. That way you'll be able to try multiple stocks on your watch list. As you find them where you'll want to buy them, you'll be able to have money in the account to buy at least one share of that stocks. And once you have that confirmation that you can make profit trading that particular stock, you can either send the chart and you can trade it. The next time is at that level where you want to buy it again, you can buy more shares to increase the profit, that you are going to make, like exponentially. So that is the strategy that I'm recommending, and I use a similar strategy 2024, 2025, as I purchase more per trade, but this year I'm purchasing less per trade because in 2025 I noticed that I didn't have money in the account to buy stocks. It was allocated to committed to stocks that I already have in the portfolio, and I will find stocks that I would want to buy at the position, but I don't have money. I didn't have money to buy. So, and we save money, in 2025 to do things around our house, like changing the roof or things like that, some big expenses like that. And we didn't save money to put in the account on a regular basis. And since I had to wait on stocks that I have for them to be profitable enough for me to sell them, there are some stocks I didn't just buy, I didn't buy them. So learning from that this year, having a bigger list this year than last year, I decided that I'm going to allocate $1,000 or so per trade. And a week ago or so, I'm deciding maybe 500 or 250. I purchased some stock yesterday, and I spend between 500 to 250 per trade. It's just my way of spending less per trade so that I can be able to buy those stocks on my watch list and see which ones are not just based on my assumption when I analyze the stocks at the beginning of the year or end of last year to create this list. I just didn't think they can work with my strategy, but I test them and they work with my strategy. So I prefer to stretch my money so that when a stock is positioned for me to buy, I can buy. That way I can see if I'm guessing or estimating the value line where I want to buy well. And then over time, it could take years, I can narrow this list down to those try and true stocks that I can say that they are working well with the strategy that I'm using. I can guess what their value line is to where to buy at, and I can guess when I should sell it based on how well I can rely on the previous year's pattern of the chart to make those assumptions, and I can just narrow down my list to those few, and from there I can allocate more per trade. So that is what I'm thinking about doing. It is a learning process, it is a journey. I'm now trying to be the best swing trader out there, and I'm not trying to share that type of skills with you. I'm just trying to create to reach our financial independence and see different ways I can get there, different stream of income I can have, so that our paycheck is not the only source of income we should rely on. So, and not putting all our need for money on our employer. So, and that is the journey I'm on, and I'm just sharing that with you as well. So those stocks, they are now they don't cost $5. So therefore it's not so much about how much it costs per share, but when you just start out and you have your list, those stocks that are positioned for you to buy, when you put them on here and it is more than you want to spend per trade, you just don't buy those stocks. And does not mean you are not going to buy at some point. Over time, your position will be better. You'll have money, you can afford to buy those stocks that you'll have judged expensive for you to buy a year ago or something like that. You'll be able to buy them. So I won't even say to take them out of your list. You can keep them there. because you will be able to buy them. In the meantime, stocks that cost $50 to $100, or I will say $50 to $50 to $200 in the large cap stocks watch list, you can try to buy those, because you won't find much that will be less than $25 per share among the large cap stocks. And again, I'm not trying to make a lot of money per trade in a short period of time. I'm trying to use the time on my side as well. So today is February 10, 2025, and we are going to analyze CME. So CME, let's see how much it costs per share. It costs $307 per share. So you are going to buy you one share. If you can save money, so have $300, let's just say $310 to spend per share, you have to be the judge on that. If this is too expensive for you at the moment, that is okay. Then if it's safe for you to buy, you don't buy it, but it's in your portfolio. At some point, you might be able to buy it, but then you won't, in the meantime, you won't spend money on it, but you'll see if there is some other stocks that is safe for you to buy that you prefer to buy. What I noticed is though, the higher the price per share, the more profit you make as well. And I said earlier that I use time on my side as well, in the sense that I'm swing trading using long option and swing trading strategy. So that long option and swing trading strategy consists of determine the option line passing by the higher lows of the chart to buy at. So I might find multiple, I will see the one that is long enough to be the valley line, assuming the chart is drawing mountain and valleys. So therefore, I will wait to buy at that valley line, and I try multiple different iteration of those, or option of those, and I just decided for this year to just not even wait for that to be leaving that valley line before I buy it. But when it touch base with faith, if I'm comfortable buying it there, I'll buy it there, knowing that there is a chance it might go lower. I'm okay being negative temporary in it, about 3 months or so. That is parameter that I set for myself, and then I'm going to be trying it against those stocks this year to see if my guess estimate is accurate or not, and which stocks meet those parameters and which stocks didn't. So when I'm looking at CME, is it a buy? Based on the strategy I'm using, it is not a buy. It is closer to the top of the mountain than it is to the valley, so therefore it is not a buy. We have the time, the days on the x-axis from the past to the present, and we have the price on the y-axis from $0 up. And yesterday it reached all-time highest price. So the last time it left this till line was in 2023. Now in 2023. So 2022, end of 2022, beginning of 2023. But then this line originated from there as well. So, and it has been, pretty much, and then it went up a little bit, pulled back to this support line, and went up and go from there. So it has been on this rise for 3 years now, from the beginning of the cycle. So I don't know, it took about a year to come down, so I don't know how much longer it's going to continue going up. I'm not going to buy it. I'm using long uptrend line now, short uptrend line. Sharp uptrend line will be able to use a trading on the support line, supporting the upside wall of the mountain, like this support line supporting the upside wall of the mountain. but because I'm using long uptrend line, I'm using the valley line. Like for instance, you'll be able to trace this support line and buy alongside, but it's not what I'm doing. So therefore I prefer to wait for it to come down to either one of those two lines. It didn't really touch base with this one here unless I need to adjust it, but that is the analogy behind my strategy. So it is not a buy for me yet. And if I had it in my portfolio, then I would be thinking about selling it instead, because again, I don't know for how long, how much longer it's going to continue going up. And with here it did it in a year and a half from the valley to the top here, but then from here it has been 1, 2, 3 years now. So, and here we have 3 years as well, and about a year, it takes about a year to come down, but 3 years, but it could take 3 years to go up. So therefore, if I had it in my portfolio, I'll be thinking about selling it just in case it's done going up and will decide to come back down. And it does come back down to this line, so I would prefer to wait on it at this line to buy. So it is not a buy yet for me. So thank you so much for watching. We thank you very much for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. There is a point I was making before and I didn't finish it when I said that I use time on my side buying it at the valley. Let's assume you purchased it at the valley line in 2023 and you have not sold it until now, for instance. So the corresponding price in 2023 is 155. So 155, and right now is 307. So we can do 307 minus 155. You almost double your money as a profit. So if you purchase it at 155 3 years ago and you sell it for 307, you'll make about 152 profit. So 152 divided by 155 that you spend to buy it times 100, that would be 98% return for 3 years that you held on to it. So buying it at the valley and selling it at the after it reached all-time highest price. Again, I like to rely on the past to see how many years is going up. So the past one was 3 years. It was 2 years. So if we assume 2 years, so from 2023, technically it was like October 2022. So 1, 2 to October, let's just say October, even here it isn't even past this all-time highest price. So it surpassed all-time highest price here in December. So well within that 2 years. So if you didn't know it's going to continue going up and you decided to sell it there, you'll be selling it at 243. So if we take this again 243 minus 155, you'll be making $88 profit out of that one share, holding on to it for 2 years or so, a little bit more than that. So you buy at 155 and you sold it for 243, you'll make $88 profit. The thing is, stocks that you buy for $5 or less a share, within 2 years you won't be making $88 profit from it. So that is something to consider. So when we take this 88 divided by 155 times 100 is 56% return. So when you purchase, you can argue that, well, we are using $5, so you cannot use 88, you should be using the rate. I will agree. So you buy something for $5 and you 56% return, you will see what that will give you times 5 divided by 100. You'll be making about $3. If I say 2.8 divided by 5, yeah, so you'll be making about $3 profit. So you purchase it at $5, let's say 2 years ago, and you sold it for $7-8, you'll be making about $2-3 profit 2 years later. Does that make sense? So that would be about 56% return. But that 56% return on $5 is $3. 156% return on 155 is $88 or so. So that is why if it's an expensive stocks, but it works well with the strategy you are using and you can save money to buy one share of it, the profit you will make just from buying one share of that stocks is substantial, if that makes sense. It grows your account more than the profit you are going to make from $5. And you can argue and saying that, well, the money you are going to use to buy one share of these stocks, if you use that for the stocks that cost $5, you will be buying 31 share of that stocks. That's true. Then it's just those things that sometimes I ask myself as well. When I have two stocks to choose from and they have different prices, will you buy? At least I ask myself those questions in the past when I have small dollar amount to work with and I'm facing this dilemma. Should you buy multiple share of a stocks that cost you less, or buy few share of stocks that cost you more? In this sense, buy one share for 155 per share, or buying 31 share of a stock that costs you $5. Which one will you make more profit from? Yeah, and you can do those calculations. I'm sure there will be a mathematical a way of analyzing those and decide which one will make more profit buying. But just doing it by hand like this, those are things you are going to decide. If you are going to make $2.8 on those 31 share, so that will be 2.8. So if you make $2.8 per a profit on that $5 stocks, you'll be making $86 within those 2 years. But for that 155 one share of stocks, you'll be making $88. You see, so they are close. So those are fun calculations that you can do and decide for yourself. I just find that I don't mind buying those stocks now that I have a lot to choose from. When it comes to those large cap stocks, they are relatively expensive. They are more in the range of $100 than you'll find less than $100. That's something to keep in mind. But again, if your strategy works with small cap, mid cap, you like to give them a try, you can. I just prefer to master my strategy using more stable companies, and once I'm comfortable with it, I can go back to those small cap, mid cap, and test them. I traded them in the past, especially small cap, but now that I'm swing trading, I like to start with large cap and move down. So, but it's just my way of doing it. Does not mean it's the best way, it's just one way. So thank you so much for your time. For more video series in this series, so please check in the description of this video the playlist how to start swing trading step by step using long uptrend lines. We do have other swing trading related playlists there as well for you to check it out. Thank you so much. Happy swing trading.